Hello, it's Robert Miner with Dynamic Traders Group with our DT trade strategies for the week beginning July 12th. I haven't done a video for our YouTube and Twitter followers for I think it's been 3 weeks actually. So haven't been standing still though. Of course, our regular report subscribers have been getting their daily updates, our couple videos a week, our trade tutorials, big picture reports, all of that sort of stuff. So now I'm back. We got a video for Twitter and YouTube subscribers, and I think you're going to find it really interesting. We got some interesting stuff coming up here in the next few days. At least that's how it looks for me. If you like what you learn here, is check out my book, High Probability Trading Strategies, our DT report trial. If you haven't already had one, only one trial per person, but our reports are pretty inexpensive if you like what you hear here. I just wanted to update you. I'm over 200% now, 225% in the first 6 months of this year in this Robbins Forex trading contest. Now this is Forex. Everything we teach is applicable to Forex, to futures, daily data, intraday data, ETF stocks. It's all the same. It's all just bars on a chart. So again, I'm here to help you to learn to trade, not to be a forecaster. I do use Elliott Wave a lot. A lot of people think Elliott Wave is about forecasting, and in one manner of speaking, maybe it is, but that's not going to make you money. Making money is going to be from trading, learning to identify technical conditions with a high probability outcome. Okay, let's get started. Take a look at 2 or 3 of our favorites for maybe what's coming up this week. Let me give you an update on gold. This is Gold Weekly. Just this past week, gold made a weekly momentum bull reversal from the oversold zone. More than likely, a weekly low is complete. And at the least, if it is complete, we'd be at least 3 to 4 weeks sideways to up, not necessarily to a new high, but a great trade opportunity. Let's take a look at a potential trade strategies. This is daily data for gold. It's the August contract, and it's the close only on the daily data. The daily momentum has made a dual look back bear reversal on Friday. That usually is followed by 3 to 5 days sideways to down. So here's the setup. The setup is probably won't come until near the end of this coming week, but the setup is the next daily momentum bull reversal that we get. We'll put the dailies and weekly momentums in sync to continue a weekly bull trend. So that's going to be the specific trade setup, few days away from that. The beauty of it is that almost an ideal 5-wave decline into the low about a week ago, pretty close to the 78.6% retracement, and a little short of the end of wave 5 price target zones, but pretty darn close. So this has all come together now. It's not the time yet to enter right now, but we're probably about 3 to 5 days or so away from that, and it's the next cycle in the daily momentum. Keep in mind, momentum cycles more regularly than price does, and that's why you can use it for specific trade strategies. Silver, GDX, and basically the same position. And by the way, the euro made its setup on Thursday, and actually confirmed it on Friday. So the euro is just a couple of days off of a probable weekly low. Very similar setup to what gold is. So the euro is already in a position to immediately consider long positions. You don't have to do it in highly leveraged vehicles, by the way. You can do it in an ETF, like the FXE. Take advantage of it. So I'm not going to go through the details. I'm just throwing that out there. Very similar position as what gold, silver, and the GDX in the euro. That's a brain dead setup that happened on Friday. This is the SPX, so the comments apply to the ES. I like looking at the SPX, the cash data. Patterns are usually a little bit better. Usually has fewer false breakouts, that type of thing. But whenever we get a setup in the SPX, we go to any of the other stock indexes because they all pretty much reverse and trend in the same direction, more or less. The Russell, as you know, it's on its own track right now, and it's making new recent lows while the broader indexes are making new highs. So that's actually kind of a sign that you want to wake up. We may be getting some major change. But here's the SPX daily. the most significant thing, and I probably had mentioned this even 2 or 3 weeks ago, because we made a close into the closing range of this swing high. So if that's a wave one, and if we've closed in the closing range of wave one, that means we're making an ending diagonal. And that's pretty significant, because when it's finished, is that this should be the last major section of an even higher time frame trend. That's the possibility. What we want to look at, though, is just the first or the next setup we have for a short trade, which, by the way, on Thursday we had a trigger on the short side. Needless to say, on Friday stopped out. Less than a 1% loss. That's the whole thing about trading. Identify conditions with a high probability outcome and acceptable capital exposure. We're still in the same position to complete this ending diagonal, and we've hit near the extreme of price, near the extreme of time. The latest to complete this wave 5 top, ending diagonal wave 5 top, should be the 14th or 15th. That's Wednesday or Thursday. Now, that's not a projection that it's going to continue to advance into those dates. It's just that if it does, those are probable extreme targets to complete this diagonal fifth wave, if indeed these are waves 1 through 4, as I'm showing you on this close-only chart. So get ready for that. This just on Friday, we came right up to typically be almost the maximum, around the maximum on the upside. That's where about 100% of the net range of waves it's the 100% alternate price projection of wave 3, I think. I take that back. It's the 100% alternate price projection of the net range of 1 through 3 from the wave 4 low. That's right about where we closed on Friday. There's 4 other significant price relationships right around the 43.44 to 43.64, 65 range. We've closed just slightly above it. Just be aware that these are also typically right around the extreme targets on the upside. So we're near extreme price, near extreme time. And as at this point in time, we do need a close below Thursday's close of 43.20. But if we get that, friends, that is probably going to be quite a significant top if it does that. So keep that in mind. They'll be on the short-term data. We'll probably be able to identify a little closer in reversal signal with minimal capital exposure. But this is real significant if the SPX makes a close below Thursday's close at 43.2082. That would not only indicate that this advance from the May low is complete. It's probably completed in advance going back, I think it's to September. So we'll just take it a daily trend and weekly trend at a time, but just be aware of how significant that may be. That's it for today. Hopefully you have a fantastic week, and I'm back, I hope, with our weekly videos. I have another one for you next Saturday, but if you really want to keep up to date every day on all these markets, including Bitcoin and Ethereum and crude and several others, consider a subscription to our DT report. Take care.